All right, so today on the show, we are going to give you a 5-year plan for your portfolio. But if you are someone who already has a well-diversified existence portfolio and maybe is looking out for some special kind of themes or sectors, or you are someone who is waiting to build up a portfolio for time horizon of 5 years, you probably have a goal attached to you with that particular time frame. Today's show is for you because we have all the kind of strategies across asset classes for your goal-specific investment. Today on the show, I have with me Arnav Pandya, founder Moneyeduschool, and Shreyash Devalkar, head equity Axis Mutual Fund. Good evening and welcome both of you on the show. Shreyash, let me just first talk about markets with you. What's the kind of sense that you are getting from today's performance of the market?
Yeah, it's difficult to comment on a daily a 1 day performance, but it is broadly, if you look at the election as an event and its impact, broadly there is a continuity in the policy. That's what one can expect from this kind of mandate, and generally. And the policy, not only in terms of the economic policy, so by way of the outlook on and actions which may be taken during the budget session on the fiscal deficit front, which market definitely watch out closely. The internals of that in terms of spend on the capex as well as especially the investment side, and on the other hand, the policy continuity on various reforms which are being undertaken, especially on Make in India, especially on infrastructure investments, etc. So this policy continuity as well as the fiscal consolidation path which we have chosen, this is and the continuity in that is what is expected as such.
So Shreyash, what's actually giving you this sense? Because the buzz that we are also hearing is "Ab ki baar coalition ki sarkar," and it's a sort of a fractured mandate. So what is actually giving you a confidence towards this policy continuity and reform continuity that you just mentioned?
It is at least if we look at the fiscal consolidation path which is concerned, which is charted out almost a few years ago, and if you look at multiple events which has happened, including COVID, etc. Though fiscal deficit obviously went up worldwide across geographies, it was not only in India. But after that, the kind of spends, etc. That if you go by the historical decisions which were being taken, I think we are on that path, and with this kind of mandate, probably we continue on that path. That is one of the expectations one may have.
Sure. I'm going to come back to you and ask your sector-specific strategies very soon. But then before that, enough time to look at a 5-year plan for your portfolio. If in case you're someone who is yet to enter the world of investments and looking for a portfolio, I mean, there are a few ground rules that you should be taking care of. But then someone who is about to start the investment journey and also someone who has an existing portfolio. Let's take a time frame of 5 years and the kind of changes that one should be doing in their portfolio, which is existing, and a new portfolio, formation of a new portfolio.
Investors who is looking at building a portfolio, the job is obviously much easier because you need to follow some basic rules, which is that you need to keep investing regularly over a period of time. You need to first set your goals. Based on their goals, you can do the asset allocation, which is suitable for you. And based on that, look at how much you will allocate to each asset class, be it equity, debt, real estate, gold, and then depending on what your personal position is. Like, for example, say when it comes to equities, since you are starting off on a portfolio, it's most likely that you do not have experience of the equity markets or in-depth knowledge of the markets, as well as the time to manage all this. So then the solution is also quite simple for you, that you adopt the mutual fund route and let the fund managers, who are professionals, experts in this field, to manage your money for you. So in that sense, you have to understand what your position is. And then based on that, start investing regularly based on your goal and what you want to achieve. That is as far as a new investor is concerned. For someone who's already an existing investor, you need to keep asking yourself the question that what are my goals and is my portfolio in tune with those goals? because setting up a portfolio at one stage is part of the job done. But as asset prices move, as things change, it is most likely that what you started off with is not what you have at the moment. So if that is the case, then at regular time intervals, you also need to rebalance your portfolio, both across asset classes, within asset classes, and ensure that you have a diversified portfolio which controls the risk that you are taking. Because sometimes what also happens is that in the uh, joy, or rather the process of in having a portfolio and seeing it rise, you lose track of the fact that your risk is also not in tune with what it should be, or rather it has gone up more. So it's also a requirement for you to reduce the risk.
All right. Shreyas, I also want to understand, your take on the new government, as in what will be your preferences. Sources say that, JDU has demanded for rail and defense ministries. Now, looking at this kind of a change where it will be very important for PM Modi to incorporate, Bihar and Andhra, would the market also will be keeping a close track on the kind of minister and the kind of policies going ahead they'll be adopting, because so far what we've seen, there has been a continuity and there has been bold decision making, okay, since there was majority. It was easy for the ministries also to follow a particular mandate in terms of the Bharat vision that we are talking about. But since we have these kind of demands coming in and these very important ministries, if they are going to someone which is not a part of the majority, do you think the market would be reacting to this, and any kind of a policy break or recalibration, if I can call that, would be on radar?
Uh, Talking about individual ministries, it is very speculative at this point in time who will get what as such. So it's very difficult to comment on that. But if you look at from the investment perspective and which are the sectors and the investment segments, so the key segments wherein definitely investment required in India is the power sector. And that segment has been where the investment has been happening not only in India and worldwide, because of multiple underlying parameters, which includes energy consumption, trend changes, which includes energy adoption changes as well, and shift in the energy consumption from fossil fuels to renewables, etc. So underlying trend in some of these segments are so strong that as an investor, one should focus on that. That what is the need, and that need getting catered to. The stronger is those are those parameters, the better is what the outcome may be for us as an investor. So that's how as an investor I would look at it.
Arnav, Nitish Kumar party is expecting at least 5 ministries under NDA government, and railway and defense being their preferred choices. Do you think till we get the clarity about who's getting what, it's better to stay away from your sectoral exposure or any thematic exposure or investment in your portfolio?
No, see, there are two things. One is that there is political posturing, which obviously happens because they are going to go into a negotiation. But till the date on which that swearing in happens, the ministers take oath. All this is just in the whole realm of speculation. So one should not get, or rather, one should not make any investment decisions based on this. The second part here, and which is the important thing, is that if you look closely at what Mr. Narendra Modi said in the victory speech yesterday evening, it is very clear that the road to Viksit Bharat, he said, will continue. There will be focus on infrastructure continuously going ahead, road, railways, ports, airports, power, all those, the basic infrastructure which is needed. There'll be emphasis on several specific sectors, green energy, electrical vehicles, things like that, defense. So the these are the same things which he has been saying, or rather, which the government in the past term has also been following. So, in that sense, you can see that there is clear thinking, there is continuity. Who the minister is, how they implement it, that is a secondary matter. It's not like that if there is a coalition minister in one of the ministries, work is going to stop. But that should not be the basis of making an investment decision. The question for you as an investor is very clear, that if you expect a theme to play out, how are you going to take exposure to it? You have two options. One is that diversified equity funds across a range of areas, be it large caps, flexi caps, mid caps, have exposure across sectors. So you can take an exposure through that route, or you can go through the thematic or the sectoral fund route. But there the risk is higher, and there specifically that sector has to do well, one, and two, you also have to consider the fact that how much of the valuation is already priced in. Because if you look at something like infrastructure, everyone knows that infrastructure will still receive attention going ahead. The capital allocation to it has been increasing in the budget after budget. But if you look at infrastructure funds and the kind of performance they have shown, 300 400% rise over the past 2 3 years, then it is also evident that a lot of the value is already within the prices. So as a new investor, if you are going to allocate money there, should you be doing that? So that these are the important questions that investors need to answer, and not just focus on the headline and then make an investment.
All right, so no need to get much ruffled about these kind of developments, and it's better if you count in your risk appetite and your alignment of the financial goal in your portfolio. But then, Shreyas, coming to you and your house view and the kind of take that you are taking across sectors. So, what's the road ahead for you? I mean, if it's a fund-specific approach, what will that be? What are the kind of sectors that you're looking at, and overweight, or you're trying to go underweight in a few sectors? What's the current status?
Actually, as far as election as an event is concerned, now it is behind, and generally the portfolios are built, as I said, based on the underlying trends rather than anything else. So one is definitely the underlying trend of demand growth, the structural stories. That is the first parameter which we consider. And secondly, obviously, one has to also be mindful of the valuations. So considering both factors, because there has been sharp run up in certain segments in the market over last 3 to 6 months, especially. And considering both these angles, that the underlying trends in terms of earning growth, in terms of possibility of room to growth in particular segments, along with the valuations. When you look at both the angles, then if you look at our portfolios, then our portfolios are well diversified across segments. So and the diversification is more to do with which category you're talking about. So large cap oriented funds are generally mostly into the consumption oriented themes, like I would include banking and financial services in that, because that there the growth is mostly expected out of retail credit growth. So it is consumption oriented themes like the retail credit growth, or it is also to do with retail as an industry. It is also to do with consumption themes. It includes even consumption discretionary items, and it has a certain exposure to the sectors like investment oriented sectors like power, etc. While when you come to the mid cap categories and small cap categories oriented funds, you will notice that there this by design, or by the construct of the underlying benchmarks, there the exposure to financial services is less in those kind of small cap mid cap oriented fund, while you will see that there the exposure to investment part of economy is more. So when investors are choosing a particular fund, I would like to look at it in this manner, that the large cap oriented funds generally by design, because of underlying weightages in those funds, are more tilted towards the consumption oriented themes, and that's what has been the case with us. And mid caps and small caps are more towards the investment part. In this overall context, one need to be cautious on the export part of economies, because there we have seen certain earning disappointments over last 1 year. So it started way back a year ago in IT, then in chemical, then in the export part of capital goods. So that is where we have been cautious.
All right. So Arnav, now going ahead, strategies for rebalancing or reshuffling your portfolio. What would you suggest?
So strategies, one is very clear that you should be diversified across asset classes. And I'm saying this because sooner or later you will see that there is going to be a situation where interest rates start coming down. So at that point of time, having an exposure, an adequate exposure of debt according to your requirements is essential so that you also benefit from this change in trend in the interest rate cycle. That is one thing. The other part is that look carefully in terms of whether you are taking too much risk in the portfolio, because if that is the case, and that can be because of two reasons. One is that either you have allocated more to specific areas, or it could also be that you have allocated properly, but over a period of time, because of the sharp run up in various mutual funds, your exposure to a particular area has gone up, specifically small cap, mid caps. If that has happened, or some specific sector that has happened, it is definitely time to ensure that you do some rebalancing, because this kind of rebalancing is required. If you use the current situation as just an excuse to do it, then it's better. Otherwise, you should be doing it on a normal, regular basis. So do these kind of things, reduce risk in your portfolio, and ensure that over a period of time, the portfolio and the investment keep growing through regular investments. If that these strategies are followed, then it's more likely that you will end up with a healthy portfolio over a period of time.
All right. Shreyas, one question on mid-cap and small-cap valuation. Do you think the froth is now cleared and we have some reasonable valuations in these two categories?
There one need to look at in a manner of the businesses, underlying businesses, and its growth. So what we find at the nature of business, which is there in especially small cap rather than mid cap category, and some of them in mid cap as well. The businesses are one is more B2B in nature, and the businesses are more where the free cash flow generation is relatively less. So definitely, when the cycle is good, with the growth estimates and earning upgrades, generally market tend to give less importance to the free cash flow generation ability, and that's where the market multiple gets elevated. This process actually has happened in last 3 to 4 years almost. And in that process, what is observed is the valuation in the context of their historical averages, as well as in the context of free cash flow generation ability of the underlying business, definitely remain high. And that's what this observation has been there for. It's not 2 days, it is like since last 1 year, everyone is having this observation. And despite that, definitely some of this segment has gone up. And one of the reasons primarily for that has been that on a relative basis, the key segments in the large cap has disappointed on the growth. And this has been one of the main reasons why the mid and small cap continued to do well, despite the high valuation so far. But then it has got to a level that one need to really be careful, definitely on the valuations. This comment is not widespread on all mid and small cap oriented companies. It's more to do with specifics where definitely their free cash flow generation ability is relatively less, and the return on equity profile is not poor, is poor actually over cycle.
All right, Arnav, now talking about having international exposure, can that be an area where, as per your risk appetite, you can look at, if not sector specific allocation or diversification in the portfolio on the domestic front, should you be looking at diversification on the international front?
Well, once your portfolio size rises, it's always logical to go in for different types of diversification, and geographical diversification is a good way to go about it. Secondly, is that if you have several goals which are going to be in, say, foreign currency. So, for example, if you have a future child's education in mind, which is going to be abroad, then having a little bit of exposure through international investments is a good way to go about it, because it reduces the currency volatility and risk which you have in the portfolio. The only question now is that you might not get the choice of funds in terms of if you want to invest internationally, considering the various restrictions that have come into place in the mutual fund industry. First, for actively managed funds, then even with respect to ETFs. Whether they are open for investments, that's one of the questions that an investor should also look at before they are looking for international diversification. But that is always a good idea. But it also has to be seen in respect of your requirements as well as the size of your portfolio.
Shreyas, let's talk about FIIs and our domestic investors. Now, looking at the mandate, a lot of experts are of the view that, we might not really have FIIs entering the market very soon. I mean, they will still take time to see the kind of budget is presented or whatever 100 days agendas that might come up. One thing that I want to understand is, will this impact the retail investors, especially the SIP numbers, where we've seen record every month coming up? Do you think any kind of trimming in those numbers will visible?
Any parameter or any data point which rises sharply, obviously there is always a question that yes, whether the sharp rise is warranted and whether it is sustainable, whether it will come off. One need to look at a broader trend. So if you look at in last even 10 years, right from twin deficit crisis almost in 2013 to Ireland affairs, then COVID, etc. Through ups and downs, through various such events as such, we have seen that equity as asset class has helped investor make money. In this last 5 to 10 years journey, even 12 years journey now, since twin deficit crisis, you will notice that there has been a time period of sharp returns. There has been time period of a relatively sideways market. And what we have observed is flows have been more dependent of this outcome on last 2 to 3 year basis, on a rolling basis, right? So we have seen that in 2020, the inflows in mid and small cap categories has used to be much lesser than the large cap category, and now it is obviously reverse, which is also the outcome of the great returns what it has generated. So in my opinion, considering that the potential of this category to generate return over longer period of time, I think that flows may continue. There may be some hiccups more here and there, more because of the returns, because that's what has been the observation over last 8 to 10 years. But all in all, that secular trend may not change.
All right. On that note, we not only have a 5-year plan, portfolio plan ready for our investors, but then the journey ahead and the kind of triggers that one should be aware of, very well discussed on the show. Thank you so much, both of you, for helping our viewers formalizing their strategies for the investment portfolio today. And on that note, it's time to sign off, but I'm going to leave you with our WhatsApp number and email ID, where we keep waiting for your portfolio queries, questions, so that we can do live financial planning on the show. Thank you so much for watching. Goodbye.
If you like this video, then like, share and subscribe to ET Now.